I am indeed honored to be here. Esteemed colleagues and distinguished guests, salam alaikum. You can probably tell by my name that I don't come from very far from Pakistan, although I've lived most of my life in North America. So it's really an honor to be there with you. In fact, I wish I was there with you. I'm in Toronto right now, close to midnight, and it's about -5 degrees Celsius. In fact, if you hear any noise, it's because we had so much snow that the trucks are coming to try to pick all the snow. It's kind of been unprecedented. So I kind of miss your 20-degree weather in Islamabad. It is my honor and privilege to address you today at this important seminar organized by the State Bank of Pakistan and the National Institute of Banking and Finance under the SAARC Finance Platform. I extend my sincere appreciation to Deputy Governor Salimullah. In fact, I enjoyed his speech, and I think you'll find that what I'm going to say dovetails well with what he said and would be kind of complementary. He talked about a number of challenges that are not just unique to SAARC, but these are global challenges, including staff retention and other matters, technology, AI. Also, like to thank Governor Jamil Ahmed of the State Bank of Pakistan, who has spoken and attended several Toronto Centre events in Washington and in other places. I will talk later in the speech about the work that we have done with Pakistan, which is quite exemplary. And I would like to thank our host for bringing together such a distinguished group of experts from this region to discuss the evolving challenges and opportunities in financial supervision and capacity building across SAARC member countries. You have actually a very interesting and important region. I was just looking at 1.9 billion people. You're essentially about 23% of the global population. And what happens in SAARC does matter. And many of your people live in other countries, including Canada, United States, and elsewhere. So this is a region of consequence, and you are really in the crossroads of civilization and conflict over the centuries. And I know better because I come from a country very close to you. So I'm also bringing greetings on behalf of Toronto Centre's Board of Directors and our chair, Governor Stefan Ingves, who's the former chair of the Basel Committee and the former governor of the Central Bank of Sweden, and also Eric Tiden, who's the current chair of the Basel Committee. Just a quick introduction about Toronto Centre for those of you who may not have heard about us. We were established 26 years ago, and we have focused on providing high-quality capacity building programs for central bankers and other financial regulators and supervisors, primarily in emerging markets and developing countries. We've trained more than 30,000 supervisors from 190 countries and territories. We remain committed to increasing the capacity of these public officials to enable change in their agencies and to build more stable financial systems that are also very inclusive. We are grateful to Global Affairs Canada, the Swedish International Development Cooperation Agency, and the IMF for their strong support of our mission. They're very important partners for Toronto Centre. We also work with a number of other partners. We at Toronto Centre have been ourselves a steadfast partner in supporting supervisory capacity building efforts worldwide, including in South Asia. We've done so through our active long-term engagements on risk-based supervision with the State Bank of Pakistan, the India Insurance Regulatory Authority, and the Nepal Financial Regulatory Authority's Insurance and Securities. We have also trained officials from other members of SAARC platform on various aspects of financial stability and core supervision through other regional and international programs that we deliver with our partners. I'm going to run through a number of challenges. I think the person who kindly introduced me covered some of them. And also I'm going to talk about opportunities and about how our world is beginning to shift. Before I embark deeply into my remarks, it is important to situate a couple of cross-cutting challenges faced not only by SAARC, but frankly, globally. And I think the Deputy Governor helped me set up what I'm going to talk about. While while capacity building is a crucial pillar of effective financial supervision and financial stability, a major pressing challenge is retaining skilled professionals within regulatory agencies. The demand in expertise in areas such as IT, AML, CFT, fintech, risk-based supervision is growing rapidly. And regulators often struggle to compete with the private sector in attracting and retaining top talent. And this is not just on you. I mean, when you look at OSFI and some of the other organizations, the same thing happens. Sometimes their challenges are actually a little bit more complicated, and you may be facing some of the same challenges. They go try to beef up, increase their IT staff. So on the one hand, some of them leave. On the other hand, how are they going to teach them supervision? When you bring hundreds of people into your organizations that actually do not understand supervision, but have a technical skill, then all of a sudden you run into much, much bigger problems. These issues that preoccupy regulatory agencies around the world are not just in the SAARC region, as I mentioned. Addressing these issues requires not only competitive incentives, but also a focus on professional development, career growth opportunities, and a strong institutional culture that values public service. Money is important, makes the world go around, but it's not all about money. The younger people today have different needs. They are on social media all the time. They keep connected with a whole bunch of different people at all times. So the culture element is actually very important when you think about retaining. The reward for resolving this challenge is a greater efficiency and smoother functioning financial sector core, which contributes strongly to countries' continued economic stability and well-being. Nobody has the silver bullet on this, but it is something that we must continually work. The second cross-cutting challenge is strengthening collaboration between regulators, financial institutions, and academia, which is essential for enhancing capacity building initiatives. This can also be very tricky because each comes at it with a different interest. At the end of the day, it's the regulator's neck that's on the hook. But the responsible financial industry must be a partner in this issue. And also the regulators cannot fall for regulatory capture. So I'll talk about some of these as we go on. Threats to the financial system are constantly evolving, and a siloed approach to training and knowledge sharing can be detrimental. Regulators can benefit from academic research on emerging risks, while industry insights can help shape practical, real-world training programs. By fostering partnerships among these stakeholders, we can ensure that the supervisory capacity building remains dynamic, relevant, impactful in addressing today's financial sector challenges. These dialogues with industry and academia are very important. With this background in mind, let's reflect on challenges, broader global challenges, which also apply to you, and how we might respond to them. I'd like to talk about bridging regulatory and industry needs in capacity building as one of the first challenges. While the focus on capacity building is often on regulatory agencies, financial institutions also require ongoing development to navigate an increasingly complex risk environment. Banks, insurers, and other financial service providers face growing challenges, from compliance with evolving AML, CFT regulations to managing climate risk and integrating fintech innovations. And when it comes to fintech and big tech, sometimes you're dealing with entities that are actually operating outside of the regulatory perimeter, which makes things a lot more complicated. Capacity building efforts must extend beyond regulators to include financial institutions ensuring they are equipped with knowledge and tools to implement best practices in risk management, governance, and financial crime prevention. A well-trained financial industry benefits regulators by fostering a culture of compliance and accountability, reducing systemic vulnerabilities, and enhancing overall financial stability. Collaborative training initiatives where supervisors, industry professionals, and academic experts engage in joint learning can bridge the gap between regulation and practice, leading to a more resilient financial system. And good actors in the financial industry really do understand that. In my younger days, I was an advisor to the CEO of Sun Life Financial. Some of you may have heard of that organization. It's a global insurance company. And Mr. Stewart's point at that time was, I don't care what regulations I need to comply with. I would like to comply with the strictest of all regulations, but I just want to have certainty. I want to know what I'm complying with. That is really the issue there. So, and then a smart regulator and a smart industry person can have amazing dialogues that only strengthens the financial system. The next challenge I want to talk about is the need for strong supervision in this evolving landscape. Financial stability is often associated with sound monetary policy. I know many of you are central bankers, and monetary policy is usually the number one thing that you look at. However, true financial stability requires far more than that. It demands a strong supervisory foundation, effective risk management, and cross-border cooperation. This is important not only for central banks and supervisory authorities, but also for responsible financial institutions. Again, financial institutions play a key role. As we navigate a landscape shaped by technological disruptions, geopolitical shifts, and climate risks, capacity building for supervisors has never been more crucial. I'll come back to this theme over and over and over again. But if you just look at the global financial crisis of 2008, which primarily affected the United States and European countries, many of those issues that just brought those massive financial institutions down. We're talking about toxic assets and all these derivatives. Those are not really the issues today that are really challenging regulators and supervisors. The issues today are far bigger, far macro, and far more uncertain. And let's not kid ourselves. We don't all have the tools in the toolbox to deal with them. But awareness is where it all has to start. And starts with understanding that weak supervision contributes to financial crises, impeding economic growth, both domestically and internationally. Many challenges stem from inadequate legal frameworks, ineffective supervisory methodologies, and limited expertise and resources. So when we say a central bank or a supervisory authority has to be independent, that means something. That independence is very, very hard to guard. You don't have to go very far. I'm going to talk about examples of countries where those things are happening right now. And, it's kind of surprising that it's happening to those places. Addressing these gaps through effective capacity building methodologies is essential to ensuring resilience in SAARC economies. So the elephant in the room, geopolitical uncertainties and financial stability. The SAARC region is not new to geopolitical uncertainties. I mean, you live amongst giants in your geography. And geopolitical system is more interconnected today than ever, and geopolitical uncertainties have profound implications for local financial sector. Election results matter. Recent election results in lands far away from you are impacting your region, influenced by geopolitical developments beyond their borders, and have added further complexity to global economic landscape, influencing capital flows, trade policies, and investment decisions. So when the US Federal Reserve pulls itself out of the network for greening the financial system, what does that do to that coalition of 140 or more central banks and supervisory institutions that are working on climate issues? What is that going to do if a major player, and I'm not saying this happened yet, chooses to weaken the multilateral system, whether it is the international financial institutions, regional development banks, or even the international standard setting bodies in Basel and possibly in Madrid. Let's hope it doesn't happen. And let's hope that the trend of these elections are not going to turn into every country for itself. I mean, you are an important region. You've come together. You're a region that is not without its own geopolitical issues, but you have seen the wisdom to do this. So I hope the world also is listening and learning from regions like SAARC in this. And despite the importance of SAARC, I mentioned that nearly 2 billion people, almost 24% of the world population. In South Asia, external shocks, supply chain disruption, and inflationary pressures continue to pose challenges. We know about the Sri Lanka recent economic crisis, which underscored the importance of strong fiscal and monetary management, while Afghanistan's economic struggles highlight the need for global financial cooperation in a state that has gone through a massive transition. And of course, these challenges are not unique to your region. Therefore, central banks everywhere must remain proactive in their risk assessments and adopt forward-looking supervisory strategies to mitigate financial instability. We talk about uncertainties a lot, and the one thing that we want to be able to do well in our roles as supervisors, central bankers, and us, the global international capacity builders, is to at least make sure that we take care of the financial stability. Unfortunately, it's one of those things that is never recognized until the lights are out, as causing electricity, if you can look at it as an analogy. But it's so important to the infrastructure of what we're doing. Therefore, central banks everywhere must remain proactive in their risk assessments and adopt forward-looking supervisory strategies to mitigate financial instability. And you might know that Toronto Centre was born out of the Asian financial crisis, a period of financial crisis that gripped much of East and Southeast Asia during the late 1990s. The crisis that began in Thailand in July 1997, before spreading to several other countries with a ripple effect, raising fears of a worldwide economic meltdown due to financial contagion. The other challenge I want to talk about, and I noticed that the Deputy Governor talked about that as well, and I think, again, my comments will dovetail well with his, is harnessing technological innovation while managing risks. Fintech, AI, digital financial services are transforming the financial landscape, promoting inclusion and efficiency, but they also operate, as I mentioned earlier, outside of the regulatory perimeter, which increases overall stability risks. Countries like India, Pakistan, and Bangladesh have made significant strides in digital banking, mobile payments, and financial access. However, rapid technological adoption also brings challenges such as cyber security threats, regulatory gaps, and ethical concerns. Bhutan's recent adoption of blockchain technology for financial inclusion and Nepal's growing use of digital lending platforms highlights both opportunities and risks. Regulatory testing sandboxes already established in some SAARC nations are an excellent tool to foster innovation while ensuring financial stability. Supervisors must continue to build expertise in overseeing digital finance and emerging risks. I should mention that at the request of the BIS, Bank for International Settlements Innovation Hub in London, Toronto Centre is putting the final touches on a chapter which is going to be part of the BIS's upcoming toolkit on technology. The title of the chapter we're writing is appropriate for your gathering today. It is called Challenges of the Supervisor of the Future, where we look at the opportunities and disruptions of the new technological landscape. Let me pause for a second and talk a little bit about that. We're all chasing the latest technology, worried about AI, or look for best ways to harness its potential, beefing up our staffing with IT. But let's not lose perspective. The perspective that I want to talk about, that I want to bring here, which is also the spoiler alert in the chapter we're writing, is the key argument that I think all of us, all of you, should be seized with, is that the supervisor of the future must have strong critical thinking and judgment skills in order to harness the power of technology without being consumed by technology. Yes, AI can do a lot of things, and AI is very rapid. AI programs itself. But that's where we are different as humans. We can bring critical thinking and judgment, but we can use AI as a tool to be able to speed up the work that we need to do and increase the efficiency and accuracy. But let's not lose perspective on this important issue. It is very hard not to lose perspective because everyone's chasing these technologies. Let's talk a little bit about combating financial crime, which is really an incredible issue these days, especially with technology as well. Financial crime is expanding in both scale and sophistication, posing significant challenges to the financial institutions and regulators worldwide. The increasing digitization of financial services, which has removed and erased barriers to distances, has brought more and more people into the financial system, has provided also new avenues in the borderless digital domain for money laundering, terrorist financing, and cyber-enabled fraud, making it imperative for jurisdictions to stay ahead of emerging threats. Canada, as a member of the Asia-Pacific Group on Money Laundering, or APG, works alongside 41 other jurisdictions, including all SAARC finance members, to strengthen the implementation of international standards against financial crime, including terrorist financing and proliferation financing related to weapons of mass destruction. As APG co-chair from 2022 to 2024, Canada has played a leading role in promoting regional cooperation, intelligence sharing, and the adoption of advanced technological tools to counter financial crime. However, as criminals increasingly exploit global financial interconnectivity, the fight against illicit financial flows requires not only strong national frameworks, but also deeper international collaboration and continuous vigilance. At Toronto Centre, we are committed to supporting SAARC members in building their AML CFD supervisory capacity through our tailored training programs, simulation exercises, and technical assistance. We are able to equip financial supervisors with tools needed to detect, prevent, and respond to evolving financial crime threats. by fostering cross-border collaboration and enhancing risk-based supervision approaches. We can help strengthen the resilience of financial system in this region, as we do in Latin America, as we do in Africa, as we do in Southeast Asia, ensuring that supervisors are well prepared to tackle emerging risks. And we also have a partnership with Financial Action Task Force. In fact, we held a program in the Jersey jurisdiction, which is in the British Channel Islands. This program was actually aimed at African regulators and supervisors concerned with AML, CFT. And it was very well received, and we'd like to be able to bring that to other regions as well, adapt them to the needs of regions such as yours. Let's talk about financial inclusion. Again, it is the topic that the Deputy Governor spoke in a very articulate way about, and it's important. I mean, here we have about 1.4 billion people globally who do not have access to the formal financial sector, and the majority are women. However, South Asia has made impressive progress in financial inclusion, with initiatives such as India's Yandan, I hope I'm pronouncing that correctly, Yandan Yohana, Pakistan's National Financial Inclusion Strategy, and Bangladesh's mobile banking expansion, just to name a few. Yet, as the IMF research has shown, rapid expansion of credit and financial access without strong supervision can increase systemic risks. Strengthening financial literacy, ensuring responsible lending, and maintaining high-quality supervision will be key to sustaining inclusive growth while safeguarding financial stability. These are not my words. These are from the IMF. And as you can see, training and building supervisory capacity is really the glue that keeps the two together. So it doesn't make sense to look at financial inclusion and financial stability as two silos. They're really one and the other. When there's a financial crisis, all the gains of financial inclusion are out the window, and millions upon millions of people go back to poverty. So the two really have to work together. Therefore, our recommendation is that building the capacity of financial supervisors and the industry must be front and center to better promote financial inclusion. Let's talk about climate risk and sustainable finance. By some of the things that you read of what some governments are doing, one gets a sense that climate is a done deal, no more problems, but that's not the case. In fact, I was in Baku attending COP 29 last November, and I know these issues are front and center still today, regardless of any action that any major country may choose to take. South Asia is particularly vulnerable to extreme weather events, rising sea levels, and resource constraints. One of your valued constituents, Maldives, is one of the most climate vulnerable nations, has been at the forefront of sustainable finance initiatives, and lessons can be drawn from its experience. And let's not just point the finger to countries in developing countries, in the developing world. Here in Canada, we see forest fires. California has forest fires. I mean, the severity of these disasters are growing by leaps and bounds, and they're everywhere now. And the other issue to think about, a lot of the attention seems to be paid to physical risk of climate, whether the catastrophes, right? Flooding, fires, all of these issues. Wait till we as a species, as countries, begin to make the transition to an economy that is less climate damaging, right? The reason I'm trying to bring these points is to highlight that climate is not an activism issue, it's not a cause. It's really a systemic way of the risks that we are facing. Once we start paying attention to transition risk, the climate justice issues, countries that are producing climate risk versus countries that are taking climate risks, becomes even more pronounced. And the transitions could lead to major stranded assets. So the reason I'm opening this part of the conversation is not to go deeply into it, but it's just to highlight that this is an issue that we have barely begun to scratch the surface of. Every time I talk to a supervisory authority about climate, what they keep saying is more modeling, modeling, modeling. Guys, time for modeling is done. It's time to take action. It's time to understand where we need to go. And supervisors are at a very, very delicate stage here. And I say that because that's what we do, train supervisors all the time. You do not have, as supervisors, policy levers. You do not get to set the carbon tax. But what happens is, if there is something that blows up, a financial institution that goes down, the finger of the blame is pointed at you directly, as if you did not do anything. Therefore, supervisors really need to take a more proactive stance. In fact, there are conversations now among some of the folks that I talk to at some of the standard setters. They're not public, but these conversations point to maybe supervisors at this point need to become more of advocates as well, not just the guardian of the financial industry, but advocates about what are the policy changes that need to happen. So let me give that grenade to you to handle. I'm not going to go deep into it, but it's important to see that. Now, I am very proud because Toronto Centre was the first supervisory capacity building organization. I believe it was the first, if not the first, one of the first, that actually taught supervisors how to deal and approach climate risk as a legitimate risk to the financial sector. We did this as early as 2016, even before standard setters got involved in it. Our efforts in those early years were met by a lot of skepticism, rolled eyes. Why do you have to worry about this? This is not our issues. Let someone else deal with it. And then we realized, let someone else deal with it. That someone else is us, you, right? And they all regarded climate, as I mentioned, as a domain of the activists. But, talk to people in Maldives, talk to people in the Caribbean. They don't look at it that way. It is an existential issue for a lot of countries right now. So how time changes in a short span. Today, it is universally acknowledged that climate change is no longer a distant threat. It is a current financial risk that affects economic stability. You may recall last year, the Basel Committee has joined IAIS, IOSCO, and the NGFS. They have all recognized climate as a systemic risk. You have the ISSB and others working on it. So I'm really hopeful that change can happen and we can step up. There's a growing recognition by financial supervisors in the SAARC countries, I'm pleased to note, that they must integrate climate considerations into their regulatory frameworks, encourage sustainable finance initiatives, and ensure robust climate risk disclosures. Toronto Centre is an implementation partner of the IIS, IOSCO, and the NGFS, and continues to innovate training. That's important. Why are we their implementation partner? Because it's one thing to come up with standards and guidance. It's another thing to actually do it. The rubber has to hit the road somewhere. You have to have practical ideas, examples, and exchanges, collaboration. So that's where we come in. And this year, we have introduced a 3-course climate risk certificate. It's a pretty thorough program that walks supervisors through these challenges and how they deal with other issues. I'm also glad to know, I hope this does not get reversed, that considerations of climate risk are now a mandatory part or will be mandatory parts of many FSAPs around the world. Let's talk about lessons from what we always think we're good at, but we actually are not, which is crisis preparedness and resolution. Financial crises can have devastating effects on economies, leading to loss of confidence, banking failure, and fiscal distress. Crisis preparedness through robust resolution frameworks, stress testing, and early intervention is critical. When we talk about collaboration, there's probably nothing more collaborative than the need to work together as the safety net agencies in the financial sector, whether it's the central banks, supervisory authorities, deposit insurers, and others, to take care of these issues. You'll be shocked how many times Toronto Centre conducts a program in a country on crisis preparedness, either a country-specific or a regional program where different countries attend, but also different agencies from countries. Sometimes it is in those programs for the very first time that officials from two agencies in a country have actually had a conversation about how to prepare for a crisis in their own country. So the level of communication in many countries, and I'm not pointing a finger at anyone in your region, but many countries, is very low. South Asia has seen banking sector vulnerabilities in recent years. Who hasn't? Underscoring the need for continuous refinement of supervisory approaches. For instance, India has strengthened its resolution framework through the Insolvency and Bankruptcy Code, while Bangladesh has made strides in improving banking sector governance. The experience of jurisdictions that have successfully strengthened their crisis management framework can provide valuable insights for SAARC countries. Again, let's not, those of us who happen to live in developed jurisdictions, get smug about it, because Silicon Valley Bank and Credit Suisse were colossal failures, and thank God that they did not become systemic failures. But those failures really had nothing to do with toxic assets, with some of the beauties of the global financial crisis. What they showed was inadequate supervisory response to changing interest rates and other issues, basically the bread and butter of supervision. So what does that mean is you cannot ever take your eyes off the issues that are really important. And preparing for crisis preparedness, like anything else. Those of you who've been to military service know, you take a weapon, you put it together, you take it apart, you put a blindfold, do the same thing, you go underwater, do the same thing until you already know how it's all done. Practice, 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 practice. Those of you who have cousins, brothers, sisters, others who work in the emergency services, whether it's the police, whether it's the ambulance, whether it's this and that, you know how well calibrated those crisis responses are. Well, financial sector seems to always be behind, but that doesn't mean that with preparation, things cannot improve. Toronto Centre's crisis preparedness programs, we started them in 2008, momentous year. And simulation challenges, the programs that we have, they challenge the readiness of the supervisory community and clearly show the areas of weakness and gaps requiring improvements with concrete recommendations. So when you attend the Toronto Centre program, we talk to you about the FSP attributes and everything else you need to know, some of the case studies of crises in the UK, elsewhere, but also we put you through a simulation, and it's a very rigorous simulation. There's a bit of a shock and awe, but at the same time, our simulation is about some of the very challenges you will be facing. And it is through these examples that one can really understand how well the regulatory framework, legislative framework of my country, your country, is prepared to deal with a crisis. So I really encourage people to think about crisis as a very important issue. In fact, for 12 years now, Toronto Centre and the Central Bank of Sweden have jointly offered an international crisis program in Stockholm with a very rigorous simulation, and it's in high demand. So this is an area that we will continue and highly encourage all authorities to do that. But, it's not a world of just challenges. I rhymed up a number of challenges here. So if you're getting depressed, help is on its way. Maybe I can cheer you up a little bit. We also need to talk about opportunities. So expanding risk-based supervision. Again, everybody thinks they're an expert in risk-based supervision, but the moment you start talking to them and asking them questions, you realize that not everybody, that they don't really understand it, but it's such a critical tool. So risk-based supervision, or RBS, brings perspectives that incorporates various risks, not just related to financial stability, but also to technology, financial inclusion, climate, financial crime, to name a few. So it's really an integrator of a lot of issues that you have to deal with. Also has to deal with skills retaining, challenges, collaboration with the industry. So this is where you put your clipboard with all kinds of risks, 100 risks, 200 risks, and you begin to define for yourself as an organization, what is your risk parameter? What is your risk appetite? What are your key risks? That's actually critically important. It's a judgment skill set. Toronto Centre offers long-term engagements in RBS, and since 2022, we have taken individual supervisor training to a new level. Toronto Centre has now introduced a unique, never-before-tried, 3-level Certified Financial Supervision, or CFS designation. This comprehensive program emulates the structure of the Certified Financial Analyst Training, or CFA, and participants can only advance if they pass rigorous examinations. Again, before I get into trouble by anyone, this is not the CFA. I'm talking about the structure, the look and feel, the approach. The focus is on training, course supervision skills, and judgment. That's the term that you hear from me over and over again. The coverage is both technical and leadership focused. As I'm coming towards the end of my remarks, I want to take a moment to talk about our partner, State Bank of Pakistan. And why do I want to do that? That's because it was a pleasure for us to train the State Bank of Pakistan in risk-based supervision, and my comments will provide a little bit of flavor of it. We were very impressed by the professionalism of the State Bank officials. We had no idea what we were walking into. The level of enthusiasm was very high. And even when it was very difficult for people to travel to Pakistan, they made all kinds of accommodations for our team to go there and to be safe. And my team really loved working with the officials at State Bank of Pakistan. Very smart people in an area where they knew the stakes were high. They applied themselves. They challenged us. It was a really good collaborative partnership. In fact, from time to time, Toronto Centre has to show value for money to its funders and others, and we hire external evaluators to come and evaluate the work of Toronto Centre. And these evaluators, they decided they want to see Pakistan, and we were delighted. And they developed a little case about what we did with Pakistan as well. And the other thing is about risk-based supervision is some countries that really apply themselves are in a good stead. They can really improve their systems phenomenally. So Pakistan certainly did. But 2 other countries that we have trained, Costa Rica and Colombia, far, far away from you, after becoming very good and advanced in their RBS, and they spent a lot of time on that, they received accession to the OECD. And the OECD assessors mentioned the fact that the RBS made a major contribution to the stability and strengthening of their system. Now, getting into the OECD is also a political process as well. But the point being that any investment in meaningfully doing RBS pays a lot of dividends because the entire organization gets smarter. And please don't be fooled by consultants that come and camp themselves, park themselves in your agency, stay there for a year or two, and write you big, thick manuals on RBS. Highly dubious. I think the best way to learn RBS is for you to write your own big, thick manuals under the guidance of coaches, others, kind of like Toronto Center, so you know what you have done. That's really what we want to do. Our goal in teaching RBS is to get fired, not to be asked to keep coming back over and over and over again, but for the countries to achieve their own sustainability. So let me just talk a little bit about Pakistan, and then I wrap up. From 2018 to 2020, 2023, we worked closely with the bank to support its transition from a compliance-based supervisory framework to an RBS approach. In fact, we would have been able to wrap it up sooner if it wasn't for COVID. This was over a multi-year engagement. Toronto Centre delivered 7 intensive training programs, 4 in person and 3 virtual, engaging more than 150 supervisory staff. By the end of the engagement, 94% of program participants, officials from the bank, state bank, reported a significant increase in their understanding of risk-based supervision. And it wasn't just self-reporting. We could also see the impact of our collaboration is evident in Pakistan's strengthened regulatory framework. And with Toronto Centre's guidance, the State Bank developed and published a condensed version of its new risk-based supervisory framework by 2020 and a detailed RBS process manual in 2021. I understand the framework was successfully piloted in 2 banks, and additional enhancements included new guidelines on risk management, internal audit, compliance, and governance. I believe these efforts reflect a critical role that capacity building plays in strengthening financial sector resilience. We are doing something similar with the Insurance Regulatory Authority of India and 2 regulatory agencies in Nepal in the SAARC region. And we are delighted with the progress that's taking place and how seriously these programs are adopted. So as I conclude, as we look ahead, the challenges we face are significant. They're different, they're not in a textbook, but they also represent opportunities for innovation, collaboration, and growth. By investing in capacity building, looking at it as an investment rather than an expense, fostering regional cooperation, and embracing technological and regulatory advancements, while at the same time not letting go of the need to develop and hone critical thinking and judgment, I do believe we can build stronger and more resilient financial systems across South Asia. I'd like to thank the State Bank of Pakistan and IBAF, Mr. Sajid Ali, and SAARC Finance for organizing this timely and important discussion. I look forward to continued engagement and partnership in our shared mission of financial stability and supervisory excellence. I now turn it back to the MC, and I'll be happy to answer any questions in case you have any questions. If I put you to sleep, I apologize, but I wanted to add an important message and I wanted to make sure I bring it to you. Thank you.